We are good to go. Welcome, everybody. It is Thursday, September 19th, 2024. We are at the end of our tax series for MSPs today. But today we're talking all about quarterly tax planning and why MSPs are leaving money on the table through doing tax planning on an annual basis. Sorry, I was getting feedback there. So one more time, why MSPs should essentially plan taxes on a quarterly basis to save money instead of the typical annual preparedness. Morgan, how are you doing today?
I'm doing great. Thank you, Casey.
Glad to have you here. This is a topic that we do talk about a lot here at Stride with our clients, and it really is agnostic across all industries. We see it frequently. Annual tax planning leads to being behind on your tax situation, which really essentially does what? Minimizes their ability to take effective tax strategies. But from your perspective, what is the biggest core reason why people aren't doing a quarterly tax planning?
I think just life gets in the way. When we talk about, annual tax planning, what typically happens is our clients come to us in the spring following, the previous tax year, and they want to know how to minimize their taxes. And for the most part, in the next year, your ability to minimize your taxes for the prior year are very, very, very slim. So, we always recommend, and we do with our clients, start planning early for the year, right? So even now, here we are on September 19th, and it's getting late in the game, right? We're about to hit the holidays, and life just gets in the way, right? So we want to continue doing some tax planning all the way through the end of the year. So
Yeah, I think to your point, life gets in the way, and then these things take time. I think the more time you can give your tax expert or professional who's supporting that, and you as a business owner, that time to make changes, to implement strategies. You might not have the cash flow to make an asset purchase, but if you gave yourself 6 months, you probably could. It's really about making sure you're as proactive as possible. Before we get into really what MSPs do during a quarterly tax planning, let's talk really just about some of the key taxes most MSP owners and most MSPs face on an annual basis that they need to be planning around.
sure. So I mean, obviously, the probably the most most common taxes that MSPs would have are going to be federal and state income taxes, probably some local taxes for those MSPs that are still operating their business as a sole proprietorship. They're going to have some self-employment tax owed, and then sales use tax on any sale of equipment or purchases of equipment.
Got it. So you have your federal income, you're going to have self-employment tax, especially for a lot of MSPs that are filing as individuals or partnerships, state and local taxes. I think another one that's often missed by most companies, or especially MSPs who are dealing with inventory, is sales tax. A lot of MSPs will face sales tax in their local jurisdiction. So having a professional who can support with that. What's the main purpose for quarter tax paying? What's the deliverable? What is the thing you're doing during a quarterly tax payment or a quarterly tax planning session?
Yeah, so it's a couple things. So one, obviously, you have a quarterly estimated tax payment due because the government wants its piece of the pie as you go along through the year, right? So you're paying into the system. But I think most importantly, with respect to quarterly estimated tax payments, is the cash flow aspect, right?
Yes.
Because too many business owners don't have an idea of what their tax bill is going to be, and so they can't make decisions. They can't make cash flow or budget or just business decisions through the year. They have no idea how much of that cash sitting on the balance sheet belongs to them and how much of it really belongs to Uncle Sam. So
Yeah, and I think another core issue, we've talked about this with clients every single day, it seems, about also cash flow support is making sure not only you're paying the right amount of taxes, but you're not paying too little. So in the future, you have a cash flow hit or paying too much throughout the year, where you're missing opportunities to reinvest in your business because you're using an outdated calculation or maybe a prior year calculation instead of having a partner looking at the current books, reviewing expenses and the current opportunities for specific deductions, and helping you plan how to effectively make better financial decisions to minimize that burden of cash flow.
That's right. So, we oftentimes talk about how much cash you should maintain on your balance sheet for operating expenses. Well, tax is not an operating expense, right?
Yeah.
And so you might have some cash on your balance sheet and think, hey, that's enough for my operating expenses. But if half of that goes to taxes, you really don't have enough cash on your balance sheet.
Yeah,
So,
absolutely. And I think there's effective strategies for doing that. I mean, I see companies now are using high yield savings or money market accounts to put their tax payments or their estimated tax savings there just so they're ready to pay. And it's not just sitting anywhere, but we do see it frequently that it sits in that operating cash account. And it's like it really needs to be separated because if you need that money for your business, but Uncle Sam's not going to wait. So I think it's just making sure you have a partner who puts that in from the first and foremost. Last week, we talked about a lot about maximizing deductions, especially through depreciation. But really, what are some of the considerations for MSPs in a quarterly tax plan and making sure they're getting the deductions that they're very well entitled to?
yeah. So really, again, there's the cash flow aspect, right? Probably the biggest tax deduction that any business that's going to be capital intensive is going to be depreciation expense on the equipment they purchase, which we talked about last week. One, you have to purchase the equipment to actually get the depreciation, either with cash or debt. But that's going to be your biggest, probably your biggest expense item for tax purposes.
Yeah. And
We
I,
have other
I
things out there like the business use of home and other
mhm.
deductions that we want to kind of focus in on and take advantage of, and get that kind of in place before the end of the year.
Absolutely. And I think a big one with depreciation MSPs miss is software counts as that asset. Your ConnectWise, your Halo, all of those fancy tools that you make a large capital investment to not only purchase but then maintain, those can be depreciated and you have that opportunity. And I think that's missed a lot because we think of assets as a physical hardware, a building, equipment, but it can be that software and those virtual assets too, especially if you're an MSP that does a lot of Azure or cloud development and you're investing in that asset, make sure you're taking advantage of depreciation that asset. And you can refer to last week's Stride Live to take an opportunity to see what's the opportunities of how to depreciate that. I think too is obviously expense categorization. It doesn't hurt if your normal accountant or bookkeeper's looking through normally, but you should take a look on a quarterly basis. What were all the expenses? Were they categorized correctly? Was travel and travel? Was meal and expenses and meal and expenses? Are there any uncategorized expenses? Anything else around that with expense plan management? Obviously, having an accountable plan, but anything else around there MSP should be aware of?
Yeah, I mean, other things that we would, assuming that you're doing tax planning early on in the year and not in the next year,
Mhm.
um, retirement contributions, are you going to be making non-discretionary profit sharing payments? Are you going to be paying your employees bonuses? All of those are going to be deductible when paid. And so, you want to make sure that you're kind of planning for those payments and the timing of those payments to maximize your tax deductions.
Absolutely. Yeah, I think that's a missed one is hey, those count as a deduction. You're able to deduct those, but the more time, the better to plan that so you can have the cash flow, you can plan accordingly and make sure you have confidence in making that investment. Talk about looking at the opportunity for maybe cash versus accrual basis accounting in that quarterly meeting. I mean, I believe that's a great way to look for good tax savings. But what are some of the things you're looking at when how MSPs or companies are recognizing their revenue?
Sure. So on for financial statement or book purposes, most companies keep their financial statements on the accrual basis of accounting.
Mhm.
Um, it depends on what your revenue is, right? If you're collecting MRR, then obviously that's cash basis is probably fine. If you're collecting big payments up front, so maybe if you're charging or your clients are giving you 12 months advance payments, we
Yeah.
might want to be on the accrual method of accounting for tax purposes to allow you to defer some of that revenue into the next year for those advance payments you receive, throughout the year. So,
Yeah, and I think as you see more and more MSPs getting involved in the CMMC world, the cybersecurity, the projects and infrastructure, large cloud project development, these things that have typically $5 to $6 price tags, and a lot of the time you're getting 50% up front, you're getting 10% for the following installments and months. Just having somebody who can effectively manage that. And most MSPs, one of these things happen. You get big projects in the last quarter of the year, and that revenue is being recognized often during the year that it's received, instead of saying, huh, most of this work's not done until January or quarter 2 of the following year. Let's look at deferring that because we don't want to take the hit in that prior tax year. I think that's a very big opportunity where most MSPs, since not every MSP has those type of engagements, the MSPs that do aren't necessarily conversing or thinking about that implication to their taxes. What are some of the tax saving strategies, really easy, quick ones for MSPs?
yeah, again, depreciation is a big one, or amortization if you've acquired another MSP, and in part of that acquisition you had some goodwill or you purchased a client list or something like that, there's going to be some amortization from the acquisition.
Mhm.
Retirement contributions, business use of home, the usual suspects, but these are things that we look at and make sure that we're going to be trying to take advantage of some of this stuff throughout the year.
Yeah, and then talk about, since not every MSP has sales tax, what are some of the considerations to make sure you're being compliant as an MSP with as it pertains to sales tax, or maybe even use taxes or taxes that you see in certain jurisdictions or not others?
Yeah, so that's a good point, is sort of taking an inventory of where you're selling, where your customers are, where you may have some sales or use tax obligations.
Mhm.
If you're selling services in some jurisdictions, you might be subject to collecting and remittance of sales tax. Almost always, if you're selling inventory, you're going to be collecting and remitting sales tax. So really just kind of being knowledgeable about where it is your customers are, what you're selling, whether that specific jurisdiction has sales tax collection remittance obligation, for tangible and also service. So
Absolutely. Yeah, and I think as you see, for instance, certain jurisdictions have use tax, and one of the other considerations in a remote world is if you have employees that are doing business on your behalf in another state, whether you have a client or not, you're most likely needing to file a return in that state more often than not. So I
yep.
think that's another one where you start to add, and this is truly W-2 employees, not necessarily contractors in every state, but for sure, if you have an employee, if you're in Texas and you have an employee in Ohio, no clients there, you're probably going to have to, you're definitely, I should say, I live here, I should know, you'll have to file an Ohio state tax return. So we're in almost in quarter 4 here, crazy to believe. What are some of the things that an MSP can do this year, preparing for year end, some tax savings or tax planning strategies to maximize this year and maybe forward considerations going into 2025?
Yep. So typically what we'll see at the end of the year are going to be things like if you're going to have a big capital outlay for equipment or an automobile or something like that. One, what does your taxable income look like right now? Do you need that deduction in 2024? And if so, give yourself enough space to purchase that equipment or that automobile and actually place that asset into service before the end of the year, so you can take that depreciation
Yeah.
expense. Again, retirement plans. Are you going to pay? Are you going to do non-discretionary contributions to a retirement plan? Are you going to be paying bonuses? And what is the time? What's the timing of that bonus payment? If you need the deduction, you probably should pay that bonus out before the end of the year. If you don't need the deduction, then go ahead and push that bonus payment out past December 31st. So it's just
Absolutely.
really, the timing of, do I have big expenses? And do I think I'm going to need to buy a bunch of computers and I need that deduction,
Yeah.
you better do that before the end of the year to make sure that those assets are placed in service.
Absolutely. And since so many MSPs are individual owners, what about on the individual level? Year end's coming. What are some of the considerations they can think about to reduce their personal tax liability?
Yeah. So a lot of times it's going to be again, retirement contributions.
Of course.
Make sure that you fully fund your 401ks. You have to, the 2024 elective deferral, make sure you're maximizing that. State tax payments, if you're under the state and local tax cap of $10,000, you could take advantage of making some state tax payments or property tax payments to get you up to the state and local tax cap. The pass-through entity tax credit, many states have a pass-through entity tax credit, making sure that you are making any payments that you need to make for that. So there's lots of opportunities.
Yeah, I know a big one too. End of year, holiday season, nonprofits, donations, charitable contributions is another big one that you see a lot. And I think these are just quick, easy things where an MSP or any business owner, quite frankly, listening, can just implement these. And it's very simple when you look at it. If you just have the awareness and understanding of what needs to be done and the consistency and discipline to do that throughout the year, you can save thousands of dollars essentially on your tax bill each year, and you can maximize your business's ability to reinvest. And really, in conclusion, Morgan, too long, didn't watch. What's the big thing here on the conclusion? Why quarterly tax planning? Short and sweet.
Yeah, I think the answer is that, if you let the year go by and try and do tax planning at the same time you're doing your tax return, the ability to reduce your taxes for the prior year is very minimal. If you're really doing your tax planning as you go along through the year, or even if you just do it mid-year and at the end of the year, you're going to have a much better chance of reducing your tax liability. So, yeah.
Got it. So remember, MSPs, quarterly or biannually, you need to be consistently planning, implementing your tax plan throughout the year to make your tax situation as beneficial as possible for you come spring. Morgan, thank you once again. I appreciate you coming on. I've enjoyed the tax series here. Remember, you can always check back on stride.services or on LinkedIn. You can see all of our previous episodes if you're just seeing for the first time. So thank you for joining again today, Morgan.
All right. Thank you, Casey. Bye, everyone.
Bye.
Bye.